Hello and welcome to the Wendell Effect. My name is Brandon Wendell, Charter Market Technician, and I'll be your guide for the foreseeable future as we go through the markets, various markets. And before we get started, I need to shrink me down a little bit here, and we'll jump right into this. Just a reminder to everybody, we are not a registered broker-dealer or investment advisor. We are taking a look at this information from an educational standpoint only. I'm not telling you to buy or hold particular securities. Keep in mind, there's always risk of loss. No matter what we do to try to minimize the risk, we can never eliminate it. And past performance is not indicative of future results. Just because we've done well in the past doesn't necessarily mean we're going to do well in the future. And we're not subject to trading restrictions. We could have a position in a security or initiate one at any time. Sorry, I got moved out of the way there. Anyway, for today, actually, before we get that, if you want to stay in touch with us, please email me if you got any requests as well, things you'd like to see. Let me know at the Wendell Effect at TradingMindsetAssociation.com. You can also hit me up on Twitter as well. I'm very active there at TraderBW, and you can also find me on YouTube, obviously, and comment on the videos. Don't forget to hit like and subscribe to help me out as well. I appreciate that. That way you'll be notified when the new videos get released as well. So the schedule for today, and I'll move myself down out of the way there. Here we go. So for today, the schedule number one, we're going to be taking a look at the live markets and taking a look at the weekly market analysis for the equity index futures as usual. Then we'll jump into the energy futures, onto sector rotation, sector analysis. Then we're going to discuss the Indian markets and wrap it all up with a little discussion on crypto as well. So pretty much the same schedule we've been doing. Apologize, I was off last week for my birthday. Took a little vacation, back, rested, ready to go, ready to attack the markets again. So kicking it off for the week of August 14th, we're going to take a look at the equity index futures. Starting off with the S&P 500, you can see we've broken a new high. So we didn't make a higher low per se. We've been making lower lows, but we made a higher high. That broke the downtrend. It did not put us into an uptrend. There's a big difference between being in an uptrend and just ending the downtrend, which is what we did. We ended the downtrend. Okay, so we do have some strong movement up. We have plenty of momentum, but we're still not above 60 yet on the RSI. So unless we can get above 60, we're not truly bullish. I believe that we will get another move back down at some point. We kind of established a weekly demand here, if you will. We had the rally, base, and then rally those last 4 weeks. Very, very bullish. So I wouldn't be surprised to see us return back to that area. Maybe in September. September is notoriously the worst month seasonally for the S&P 500, so you can check that out. I mean, we'll pull back then, or I don't know, maybe sooner, maybe later, who knows. As of right now, though, we're bullish. You got to play the bullish trend. Going down to the daily chart, we do not have any overhead supply until 44.3775. So you got to be on the bullish side until the market tells you otherwise. And you can see the momentum is growing. So it doesn't look like it's ready to give up yet. We've got room to go up, and I'm going to play that direction until the market tells me not to. Going to the 4-hour chart, speaking of not to, we have a little bit of a pullback that's ready to occur. What we're seeing in the price action is higher highs. Okay, you see that right there, higher highs, but we have a lower high on the indicator. So that shows a lack of momentum as we're trying to move up. Those moves are not sustainable. You need to have more momentum, not less, as you're moving up. So you see what happened in the last one where we had a divergence there. Prices pulled back because we had lost momentum on the second peak. So we pulled back, but we didn't go below 40. That's the key thing. So if we get another pullback, but the RSI doesn't go below 40, that's all it'll be, is a small pullback before we move higher. If at any point on the pullbacks we go below 40, all bets are off, then we're probably going to be shifting trends. But as of right now, we got a 4-hour chart kicking off on Sunday going into Monday. We're probably going to get a little bit of a pullback. Nothing to really panic about. We'll continue to make some new highs before the end of the week. So I do believe we'll get up to that, 43.78, or even what was the daily? 44.37 to 44.78, somewhere in that area is what we'll get before the end of the week. Anyway, looking at the 4-hour on the ES here, you can see we had impulse and correction down. The last correction we had was roughly 38% of the preceding impulse. So then I projected up, and you can see that we are making new highs. And if we do start to pull back, I'm not sure where that one was from, this retracement. It's not measuring the high. Either way, if we project from our last pullback, we should start to stall out around 42.93 anyway. So waiting for a pullback, and if we get to that 42.93, that's where the retracement values are. As we pull back, we're likely to bounce and rally from one of these areas. So it does look like we still have a little bit of room to go to the upside. We should get a bit of a pullback again Sunday night or Monday, and then continue to go higher for the rest of the week. Now, taking a look at all four markets since the lows that we made back in June, I think it was June 16th, is where we made those lows. And comparing all four markets from that point, what we can see is that the leader is the Russell, followed very closely by the NASDAQ. So the NASDAQ and Russell are the two markets leading us to the upside. Those will be the first two to give you a warning sign when things are going to fall, because their leadership upwards will then tell us when they can't go any higher, they're falling back. That's where the weak markets will stumble. And the weakest market has been the Dow. So that'll be the one to short once the markets stall and start turning down. If they just do a little pause and continue to go higher, you want to buy the NASDAQ or buy the Russell, as there are the leaders to the upside. So looking at the NASDAQ weekly, we still have room to go. Same sort of thing happened here, where we made a higher high without making the higher low first. That's not a very strong reversal, and we'll have to see if it's going to be sustainable. We need to get above 60 to get enough momentum to break through that weekly supply. Otherwise, we're going to stall out at 14,363. Now going down to the daily chart, we are losing momentum. Notice we have a new high in price compared to last week's high. Well, 2 weeks ago, basically. Last week we made a high. It was higher than the preceding week, but the momentum is not there. So that is a negative divergence, just like we saw in the S&P. Since this is one of the leading indexes, that's a big warning sign that we should get a pullback again, either Sunday or Monday. And by the end of the week, again, we should be able to test those overhead supply zones, basically 14,000 or even up to into 14,900. But we got to stumble first and pick up some momentum before we can go higher. So looking at the 4-hour chart, if we do pull back, I'm looking at about 13,073 is a nice buy point. You can see there is a drop, base, and rally area of demand right there. Once more, we're making these highs right now without the momentum to really carry us higher. So we may just bump into this 13,690 before we fall, but I'll look to buy at the 13,073, especially for above 50 or even 40 on the RSI, because that tells me we're just falling back and gathering our footing before we make another run to new highs. So looking at the Dow, this has been one of the weaker indexes, but it did as well break to new highs, as you can see, compared to this previous high. Looking at the daily trend, it's obviously bullish. I can even throw in, it's not really official trend line because it's only 2 touches, not 3. But here we actually did make higher lows and then higher highs. So definitely an established uptrend right now. I don't have any overhead supply nearby, and we've got plenty of bullish momentum. That's telling me the Dow is likely to keep going. Even though it's been kind of dragged around by the other markets, it still wants to go higher, it seems. Looking at the 4-hour chart on the Dow, though, we are going to get a bit of a pullback first. You notice there's divergence, higher high in price, but not in the indicator. That's going to lead us to a small pullback, and there's some buy opportunities. Honestly, right here at about 32,700, 32,800, that might be a decent buy area as well. I don't know why I didn't mark that off, but I would say that's probably a good pullback and buying opportunity on the Dow. Again, though, you really want to buy the stronger markets like the Russell or the NASDAQ over the Dow. So take a look at that Russell. Same thing. You can see that we had the nice rally up. We're actually in a weekly supply here, it looks like. I forgot to mark it, but we got drop, base, drop. And we're in that supply. We are not above 60. So there is a little bit of weakness here. We might have some struggles to get through that supply. Something to watch there. We're also close, but not quite at a daily supply. 2087.2 is that supply. And we're literally in this right now, as you can see. It extends to about 2075 or so for that weekly supply. So it'll be interesting to see. We might get a little bit of stumbling here as well. Lots of bullish momentum, but that weekly supply could hold us and maybe push us a little sideways. Looking at the 4-hour chart, same kind of divergence we saw in the other markets where it's not really as bad. We're making slightly higher highs here, but not nearly as much of a high as we get on price. So that momentum indicator should have been much higher if this was a very valid move. what this is telling me is we're going to get a pullback. Now, how far? Not sure. Could just be a pullback to the 1918 area, or it could be a little deeper. Actually, if I go out to my live charts here, and we'll go to RTYU 2022 on the 4-hour chart that we were just looking at. Let's go ahead and do that. There we are, and refresh. Basically, we could pull back, and let's see, we started impulsing here, although we had a little pullback from that area already, but you can see we've got retracement points. This is actually a small little demand. We have rally, base, rally right around the 1992. So our first pullback area might just be that. Let's mark that off. There it is. Or if we just want to count the last impulse up, we basically had the run up here, getting a little bit of a pullback. And there you can see the little pullback areas and possible targets before we bounce. Honestly, this one lines up with the 61.8, and from the bigger retracement, also lines up with 23.6, and there's a demand zone there. I think 1992.2 is your best bet. So wait for a pullback and look to buy if we do touch that 1992.2 with a stop below 1979, and we could keep going for a little while. You know, we've got these extensions we could possibly put in for targets, but basically looking at buying 1992.2. Stop loss would go just below this area. Let's see here. There it is. Let me fix that. That's better. So we're looking at about 1978 for the stop loss, getting in 1992. Now for the target, a couple possibilities here. You've got the move off the lows. So we can do a Fibonacci extension or projection. And you can see we did a little bit of a correction here. We're impulsing up again. We didn't quite hit our first target. Or you can just measure the most recent impulse. And we can possibly see where there's some overlap as well. If we get a pullback, look at that. There's overlap right there, right around the 2035. So that would actually be your best first target because you got overlap. Second target somewhere in the neighborhood of 2064. So I'm going to call it as this. We're going to look to buy, again, 1992.2. Target number 1, right there. And target number 2, roughly in this area. Let me get rid of these other extra lines that we don't need. And now we have a trade idea there. So there it is. Going long 1992.2, 1978.0 for the stop, 2035.4 for the first target, 2069.4 for the second target on the Russell. And that's a 4-hour time frame. All right, so, whoops, let me do the one more thing here. And take a picture of that just so I have it. All right. Now we're good. So I'll copy that and paste it into my slide so I have that as well. So we can save it for next week and we can review that together, see how it turned out. All right, so that being said, I'll go back to my slides here, and there it is now for the trade idea. Perfect. Okay, so moving along, we're going to get into the energy markets now for the week of August 14th. Starting off the crude oil, as you can see, we're getting closer and closer to the weekly demand zone. We're dangerously close to 40 on the RSI, which would be extreme bearish pressure that we would need to get through the demand. If we hit the demand and we're not below 40 on the RSI, expect to bounce. If we are below 40, though, on the RSI as we come into that demand zone, and the RSI is down here, that would indicate we have enough bearish momentum to possibly break through that demand, heading down into the next level, which is way down here in the 70s. So I don't see it happening, honestly. Global economic patterns and things as they are, maybe, maybe not, but it's not a high probability that's going to break down. I think we might end up bouncing or at least going sideways in this area. Going to the daily, I'm sorry, that's the daily chart, not the weekly. I apologize. The text is wrong on that. But on the daily chart, we had a positive divergence here, and that led to a little bit of a bounce. But we never got into bullish territory. You can see we even couldn't get above 50 here. So we kept pushing back down. This is suggesting this daily demand is not going to withhold the next test. We should break right through that. I don't really have a demand zone below. Remember, I was looking at the weekly about 84.50. So it looks like we could drop from this 89.92 area all the way down to that 84.50. So that may be where we start heading this week. Just down below this demand, down to that 84.50 area. On the 4-hour chart, you can see we ate up a lot of the weekly demand. Actually, last week we ran into this daily demand about 87.20, 85.40, I think it was. Yep. So when I refine that, you don't see here on the daily as well, but I think, I'm sorry, that was a 4-hour chart. We bounced off the 4-hour, and now we're getting ready to head back down. So we barely made it into bullish territory, so that's going to slow our descent a bit, but overall, still pretty bearish here on crude oil. And, maybe that'll give us a little relief at the pumps as well. We'll take a look at gasoline. But looking at crude oil altogether, you can see for the next week, August 14th through the 21st, normally it's not very bullish. There are only 30% bullish wins in the last 10 years. So 70% of the time, 7 out of the last 10 years, this week has been bearish for crude oil. So that kind of fits right in with the analysis we just saw in the chart that we're expecting prices to move to the downside. Looking at that should be NG, not NQ. I apologize, but up here you see it says NG. I just mistyped. But it is a weekly chart. We tried to make a rally, could not break the prior highs because we really didn't have enough momentum. Little pullback, we're trying to make another run. We actually are getting a little more momentum than we've had in the past. So it'll be interesting to see if we're going to be able to hang out in this area or even go higher on nat gas. What happened was we pulled back, as you can see, close to this daily demand and couldn't even hit it. We started rallying. So this is looking like we may see a little bit of sideways movement, not really seeing much momentum to the upside or to the downside, honestly. It's really not much going on there. So it looks like we might get caught in a bit of a range between 7.5 and 9, at least for the next month or so. Looking at the 4-hour time frame, again, we're trying to make these rallies right here, but we had a little bit of momentum. It started to die off just a little bit. I would say overall, sideways to just slightly bullish momentum. That's what I'm expecting out of this for the next week. So buy the pullbacks. Let's look for that. Looking at nat gas, you can see for this week, August 14th through the 21st, for the last 10 years, it has been just slightly bullish. 60% or 6 out of 10 years, we've had moves to the upside. It hasn't been a lot. You can see the average return was 0.15 and actually on the negative side. So it's not really like it's going to go very far. So this is kind of playing into what I was saying, is that slightly bullish, but overall kind of sideways momentum is expected out of nat gas. Moving on to gasoline. On the weekly chart, we started pulling back a little bit. We have not made it into bearish territory, though. So we're close, but not quite there yet. We need to go below 40 to really see this start to collapse. Not really much to hold it up. If there's demand you're looking for, really, it's down here at about 2 to 220. Looking at the daily time frame, we just bounced off a demand zone, but that demand is not going to hold. Basically, when we came down to demand, we were under 40 on the RSIs. We hit demand. That means demand will not stand. So we had a small bounce, but what you'll notice is we're not making a high here. Okay, we made a high, but the current price movement up is failing to break the prior highs, and that's because we were below 40 when we hit the demand zone. We had too much bearish momentum to make a new high. So that's telling me that we're getting ready to collapse, and we should go right through that demand zone. I don't know if I had anything else on the daily. Let's take a look real quick. Again, going into RB, oops, wrong page. I'll snip. There we go. Going in on the 4-hour chart here again for the gasoline, we'll refresh this. There's that demand zone we were looking at. I think it was on the, it was on the daily I was looking at here. So we'll go to the daily. Anyway, you can see there's a demand. We're going to be heading back down towards that demand. And there's really not much below it as far as any other demand zones that we're likely to hold up at. I don't see anything. Everything's just kind of weak. Interesting. We had one little demand right here, rally base rally, but that's been tested. Doesn't look like much anyway. It was right here. You can see we already tested that, so we're likely to go through it. Next area really is right here at about 225 to 2.21. So could we start dropping? Well, we're not going to move down that fast. I would say this week we're probably going to make another test of the 2.76. We're already starting to see weakness trying to push back down. So eventually I think we're going to end up down right around that 2.76 area, maybe lower than we were this past week. So look for some new lows to be made in gasoline. Look for shorting opportunities on the futures. Even on the 4-hour time frame, well, we had a little bit of a pull upwards. You can see we had a negative divergence, called a pullback, tried to rally, couldn't get into bullish territory, so we made fresh lows. Well, recently we moved up and did go above 60. So we have a lot of bullish pressure that is preventing us from dropping very quickly. But we're getting some weakness and we should start to drift a little bit lower. Just don't expect very fast movements to the downside yet. But overall, yeah, I see us moving down. Looking at gasoline, last 10 years, slightly bullish edge there. But again, with the average return pretty much flat, I would not expect a lot out of gasoline this week. So maybe some scalping or intraday trading opportunities, but not a whole lot on the swing trade basis. Moving along, heating oil, we just bounced off of a demand zone on the daily chart. We had drop, base, and rally. As you can see, we pegged that area and bounced. We were in a bullish area. We were above 40, so we held the demand. Actually couldn't even go into the demand very well on the weekly. You can see we just hit the top of it. Now, the question is, how far are we going to be able to bounce? Are we going to make some new highs, or are we going to stall out? This doesn't really tell me much. We are a little bit weak, so we could just go a bit sideways. Going into the daily chart, though, now we start to see some issues. We have a couple supply zones overhead. So you had rally base drop that we're starting to react to. You notice that indecision candle where we basically have wicks on top and bottom. So we got buying pressure and selling pressure kind of matching up against each other, really going nowhere in price. So we could go a little sideways and get sandwiched between 354 and 3.07 for the next week. So that's kind of what I'm seeing, is that we might start rolling over, dropping down to these lows, bouncing off the lows, and just overall back and forth. Not a whole lot of movement, but overall a bit more bearish than bullish here. On the 4-hour chart, we are seeing a negative divergence. Prices moving up, indicator moving down. That's suggesting that Sunday going into Monday, we're going to get a pullback. Not sure if we've experienced it yet. Take a look. And today, as the market has already opened, you can see there's red is pushing down, just as expected. And this is on the daily, so if I go down to the 240, there it is. You're seeing selling pressure coming in. Now we got a big topping tail, so I'm not surprised. We should keep pulling back. So where are we going to end up? Well, it's not much of demand along here anywhere, except for the origin of the move. Don't really need this anymore. Oops. Yep, there we go. So looks like this is our demand. And maybe a little higher. Yeah. It's not great, but yeah, that's probably it. So we could drop to 321.49 area, but I just don't see us being able to move down quickly beyond that. Might just get stuck and move a little bit sideways, as I was saying. So that's it for the energy markets. We're going to move on to the stock market and take a look at the different sectors and see what's going on. We'll do a little bit of follow-up from what happened in our past videos, some of the trade ideas that I posted. Anyway, looking at the past week, or actually, I'm sorry, past 6 months, you can see that we're back into the flight to safety. We still have energy because of some of the inflation that's outperforming, but we do have the safe havens of consumer staples, healthcare, and utilities outperforming the rest of the market. So that's that continued flight to safety. You usually see that during recessions. And we did actually have recessionary data come out where we had 2 negative quarters of GDP. So it's not surprising to see those sectors outperforming. Looking at the last week, you can see that overall it was pretty bullish. And this is not indicative of a bearish market because you can see that Staples Healthcare Utilities were underperforming now in the last week. Overall, 6 months they were outperforming, but short term they're not. We're actually seeing bullish moves with bullish sectors. So it'll be interesting to see how long that's going to be able to continue. Historically, September is the worst month, not October. All the big crashes have happened in October, so everybody thinks October is the worst month. It's actually September. Historically, September is the worst performing month. So we got a few more weeks left before everything's starting to turn to the downside potentially. So we'll see. Anyway, this has been the last week as a heat map, and pretty much everything's been moving up. And you got some few notables here: Johnson & Johnson, MasterCard, Visa, not moving up as much, but for the most part, it's a lot of green. Anyway, we take a look at the sector ETFs and see what's going on with the XLY, consumer discretionary. I think this is recent. You can see we're moving up in price, but we have a negative divergence. We have a much lower high on the indicator. That's suggesting we're going to pull back. I mean, we're at a zone basically. Or did I mark this? I think it was marked incorrectly. Well, technically you have drop, base, and then drop. So it could be marked up here. We're not quite there yet. It'd be the 173.60 is where you'd expect prices to turn around. Not sure how I had that. Maybe the weekly. Let me take a look at this XLY. And we'll go out to the weekly. Nope, not there. And again, on the daily chart, basically the way this should have been marked, yeah, it is like that. I'm not sure what happened here. There it goes. That's strange. My computer actually acted up, but that's the zone. You can see you got drop, base, drop, and it's also the extension area about 173.60 that we're expecting prices to move up to. So we have a negative divergence as we're approaching that area. I would think that that's where we're going to end up turning around. So I'm looking for prices to continue to move a little bit further up before we hit the 174 and start to drop. So that's what I'm seeing right now on the consumer discretionary. Oops, where'd it go here? Come on. There it is. Anyway, looking at some of these trade ideas that we had last week, one of them was Carnival Cruise Lines or Carnival Corporation. Almost 90% of the time from August 15th into mid-September, we had a bullish run. So taking a look at the trade idea that we had posted, was looking for a possible breakout. Or is this? No, this is what I'm looking at now. I'm sorry. This is the current one on Carnival Cruise Line I'm looking at for consumer discretionary. So we're stuck in the sideways range. Unfortunately, it's not really a good demand zone to buy, so that's more of a breakout trade opportunity. And the way I play breakouts, I don't actually play the breakout itself. I wait for a close outside of that high of 1105 and then wait for it to be retested and then buy. So I'm waiting for a close above 11.05, then a retest of 1105 is where I'd buy, placing the stop 1 ATR or average true range below the entry. So if we're getting in at 1105, let's see here. My calculator open, bring it over. So 1105 minus 0.69, that would put our stop at $10.36. So you don't have to use the whole range because that wouldn't make sense. But our first target is going to be this 1293, just below the supply, with target number 2 at about 1669. So that's what I'm looking at as a breakout, not trading the breakout itself, but I'm waiting for a close above the 1105, buying the retest of 1105 with a stop at 1036. And then again, you see the targets on the chart, just supply. So that's what I've got on Carnival. XLC, which is communications, we were actually stuck a bit sideways. We started moving to the upper end of the range now. Just recently made a new high compared to all these prior highs we had since June. We're testing a supply zone, and we've got enough momentum to get through. So there's a possibility of us going higher with communications. I don't really have any trade opportunities, I believe. No. So not really anything we're going to do there because we're at supply. I don't want to risk it, but we should break out. So if you're in the communication sector, look for a continued movement to the upside. On the XLK, which is going to be the technology sector, you can see that we've already broken out of supply and we've stalled at our first projection. Well, technically second projection. The first one would have been here at 61.8. We didn't really pause there at all, but right there at 1, which is duplication of the previous impulse, we paused. pulled back, and now we're on to our next move. Should stall out. Honestly, the 1382 is not strong. The 1618 is. So $155 is the next target to the upside before we stall again. And we've got plenty of momentum. Maybe not as much as we should, so we could get a little bit of a pullback. But overall, this looks like it's going to continue to climb on the technology sector. And I expect it to continue to go to about 155. On to the industrials. We broke out of a supply zone that we had here in 95.26. Lots of bullish pressure. Should be able to continue up to that 104 area. Nothing really there to hold us back. We had that positive divergence, which gave us that trend reversal warning. We made the move to the upside, and we're going to keep going, it looks like. So bullish on the industrial still. We have LHX as a possible trade opportunity in those industrials. Just know this is a seasonal play as well. Usually moves up this time of year, but you can see we've got kind of a rally-based rally here, 234.72 to 237.07 to buy with a stop loss of 234, just below that area. Target 1 is the untested portion of the supply. 243.06 is the bottom of the supply, but really we've already gone up to 243.50. So I'm going to hold on until we get to the untested portion of 243.50. That'd be target number 1. Target number 2 is going to be just above 255, so maybe 255.65. We'll call that. So looking for LHX to move up. Hopefully we get a pullback first. Or actually, wait a minute. This was already a pick. My bad. I forgot. This is not a new one. This is a pick that I already had laid out for us. A little bit tired, sorry. Now we can take a look, see how we did. And unfortunately, this one ended up moving up first. You can see it pulled back and bounced. Notice the RSI was above 40. This is on August 3rd. That was your entry. It came almost up to the supply zone and unfortunately started pulling back and stopped out. So my rule is once I get halfway to my target, so if you bought here at 237, you would have been moving your stop loss up as soon as you got halfway to target number 1. So I would have been stopped out on a trailing stop there anyway. So I forgot that one. That was a follow-up on that trade. My bad. So that was LHX. I'm going to label this a little bit better, sorry. Fastenal was another one that we were looking at for a shorting opportunity. And you can see it was coming into this area of supply, but we have a lot of momentum. So with the RSIs above 60, you typically cannot short. So you got to wait for some sort of negative divergence or something telling you you're okay to short because there's too much bullish momentum as you're coming into supply. Well, the follow-through in Fastenal was, you can see we were above 60, so supply is a lie. When your RSI is above 60, you cannot go short. And that rule saved you because it never did any kind of divergence. It ended up breaking to the upside instead. Let's see, CPRT was another one waiting for a pullback on that. Okay, and this was, again, I put this out on the, what was it, the 1st of August when I did my last video. So I was waiting for a pullback here, and we could see it never came back. This was just a bullish, strong security, and just didn't come back. So no harm, no foul, didn't get in. Anyway, Copart, I think that's what it was, right? Copart, looking at this from the 15th of August, which is tomorrow, I'm recording this on Sunday the 14th, to September 14th, you can see there's a really good move to the upside that typically happens. So even though we missed the optimal entry, there may be another opportunity to get back into this because the window is still open. We've got a almost 90% probability of this rising for the next month. So taking a look at the daily chart, yeah, we can wait to see if it pulls back to the 120 area and look to buy at 120.35 with a stop at 118.50 and probably hold on beyond this target now to the 133.92. Target number 1 with 139 as the next target. The other way of playing this would also be, you notice we're going sideways. So let's go to Copart here. CPRT. There we go. And I had this on the 4-hour time frame. What we can do as well is pretty much mark it off as kind of a sideways basing that we're getting here. So the high is right around 130.90. So if we break out of 130.90, potentially you can go long and just use the average true range as your stop loss. So if we break out above 130.90, and we bring in the calculator again. minus 1.63. You place a stop loss at 129.27, and that way you can have a tighter stop and then target those overhead supply zones we were just looking at. So that may be another opportunity instead of waiting for it to come all the way back down, because it may not. That's a pretty big move to the downside of $9, almost $10. If it doesn't want to do that because we're just stuck sideways, wait for the breakout and the retest of the 130.90, go long, and again, just place that stop loss around that 129.27, and then target those overhead targets of 133.92 and then 139.67. And there we go. Cintas, also August 15th to September 14th, it's very bullish. 86% of the time over the last 15 years, not even 10, but now 15 years, it has been pretty bullish with an average rate of return of about 2% to the upside. So looking for Cintas as a possibility to buy. This one, we need a bit of a pullback. Again, we've been moving up. I don't want to buy into that because right now we got divergence. Prices are moving up and the indicator's moving down and sideways. So we lost momentum. We should pull back. I'm going to buy on the pullback to 401.84 with a stop loss 392.26. Target 1 is 458.19 with target 2 493.03. So those will be our targets based on Fibonacci extensions. So we just got to wait for a pullback. If it happens, great. If it doesn't, oh well. Just got to be patient. So moving on to the materials, this has been very bullish. We not only had a positive divergence, right here you see prices making new lows, but the indicator was not. That's a bullish signal, and prices sure enough rallied. But after that divergence, we had a confirmation of trend reversal as prices made a new low, but that low was not below 40 on the RSI. So when you have that low being put in above 40 after divergence, that's a confirmation that trend's reversing. And sure enough, we made another low, higher, high. And we're just chugging along here. There's nothing to keep us down. We can move all the way up into the 90s right now on the materials. So we'll see if this continues or not. But so far on the chart, it looks like it should. Anyway, we got Albemarle, which I had as a trade idea going in, speaking of the materials here. And I was waiting for a pullback to 228, 224 with a stop below that. And you could see the follow-up to this, unfortunately, just missed us. Look at that. It came so close to the entry. So I had the right idea. I was waiting for that pullback. It did, but not quite enough. And I missed out. And you can see we've already hit both our targets. So if you missed it, oh well, it happens. Let's see. CF Industries Holdings. This is another trade idea that I had back in the beginning of August. Waiting for that pullback to 90.68 with the target at 104. And unfortunately, that too was also way too bullish and never came back and just broke out. So remember what I was saying with those breakouts right here. You can see what it looked like before. If we're going sideways, you wait for the breakout by the retest. Well, look what happened. Right here, a false move down. There's your breakout. There's your retest. So if you had gone long with this retested, this sideways motion, you could have bought right there and had a good opportunity. So just be patient, pick your battles, wait for the confirmations, wait for the pullbacks. Anyway, XLE, the energy markets, this has been very, very bullish with inflation. We actually just tested the prior highs, but we have a lack of momentum here. So I'm expecting a bit of a pullback. We only made it about halfway up to the next supply zone, but this looks like it's getting ready to fall down yet again. Kind of caught in a range between 72 and 80, basically. The consumer staples is creeping up. It's slowing down right at 76 where it has supply. We're losing momentum, so this just kind of looks like it's going to drift sideways. Not seeing any great opportunities there. Looking at the healthcare industry, that is still moving to the upside. And you can see that, well, we've got some momentum, but it's not strong. Looks like we're going to continue to drift a little bit higher here in healthcare. So Danaher Corporation, this DHR, had an idea on this one as well. Notice from the 15th of August, 80% of the time for the last 15 years, there's been a bullish move on average about 2.5% to the upside. So a pretty good opportunity here if we can get that. Basically waiting for another pullback. You can see we had a sideways move and a breakout. So not sure this is going to be able to pull all the way back, but if it can, I'm looking to go long 277.44 with a stop loss 269 and targeting 323. There's really nothing there to hold it down. So the other alternative, as I said before, with these breakouts, if we go into DHR, there we are, and it was on the daily chart. Basically, you can wait for it to retest if you're interested, kind of the basing area right here. So if we come back down into that 291.50 area, potentially, we've already had the close above, so we can wait for it to come back and retest, buy the pullback to 291.47 or 291.50, we'll call it, and your stop loss would be 1 ATR below, which is about $6.34. So what is about 285, somewhere in that area would be your stop, and just target the same. So there might be an opportunity on that for the breakout and the retest. On to utilities. Look at this, just going straight up. There's nothing to hold it down anymore. Our next target is 78.40, and we've got plenty of momentum carrying us upward. So just look for that to continue to go. Didn't really have any trade opportunities there. And financials also still continuing to climb. No overhead supply, just have 36.28 and 36.93 as the next targets. Aflac was a trade opportunity, and you always have to be careful. This was going to be a short, I believe, right around 58.72, but you also had earnings. So you got to be careful buying or selling into earnings. It's usually best to wait for the numbers to come out, then trade the aftermath. So looking at Aflac, what happened, I'm sorry, this was on the daily. It was actually a long, not a short. So looking at the 4-hour chart just before the earnings came out in August, you can see it was looking at a possible buy on a pullback to 56.08. You got the two targets, 58.13, 64.54. So following through to see what happened, it actually worked. So hopefully you're able to catch that. You can see the earnings were released. We gapped down on the earnings, came into the demand zone. Remember, this is after the earnings were released. So you were able to trade the news after the fact, buy at the demand, and you can see that it just kept going and going and going. It's almost at target 2 right now. So that was a good opportunity. Hopefully you got that. Anyway, one of the last sectors here, real estate, we also had a trend reversal where we had a positive divergence followed by a low that could not get below 40. So we're moving up into supply right now, but we've got enough momentum. We're going to break that. We should be able to go back up higher, maybe into the 48 region here. So we got plenty of room to go for another $3 or $2.50 to the upside here on real estate. Anyway, that's it for the American markets. I'm going to move over to India now for the week of August 14th and take a look and see what's going on in the Nifty. You can see the components of the Nifty for the past week kind of mixed. I mean, we had some of the big names, Reliance, TCS, ICICI Bank, HDFC Bank, all moving up, but you also had, well, these are kind of consumer non-durables. That's kind of the staples, if you will. Hindustan, Unilever, Britannia, Tata Consumers. Anyway, those are pushing to the downside. So kind of a flight to risk over safety right now. Anyway, look at the Nifty Weekly. Basically, we kept moving up, moving up, moving up, and retested this overall downward trend line. Let's see. Yep. As you can see, we're up against that, and we're breaking above 60. And that's the first time I've been above 60 since the beginning of this year. So that is very, very bullish and suggesting we might be able to go a bit higher here in price as well. Looking at the Nifty Daily, notice we made a move to the upside. We paused at our first extension. We had basically impulse, correction, impulse again. We paused at this one. We paused at this one. But the momentum is very strong. It looks like we're going to continue to go up this week to 17,885. There's nothing to hold us down, basically. Moving on to the 4-hour chart, same thing. We see lots of bullish momentum. We pause at those Fibonacci extensions. Right now, on the 4-hour chart, we're getting a bit of divergence. Prices are moving up, but the momentum is dying off. That just means we're going to get a pullback. That gives us buying opportunities. I wouldn't be surprised to see us pull back to 17,500 to close the gap before we go higher. So that's what I'll look for. But I'm a buyer. I'm bullish now. And that's what the markets are still telling me. It's going to continue to go up. Looking at Reliance, one of the heavyweights, we finally actually broke to the upside. You can see we broke out of supply after a small pullback. The problem that we're running into is we've only got a little room to go to the 2654, and we don't have the momentum there. So expect Reliance to give up a little bit and pull back. That's not really been the driver of this market to the upside anyway. A lot of the financials have been the drivers. ICICI Bank, HDFC Bank, even the things like TCS, the tech side. So look for that. Speaking of TCS, same sort of thing going on here. We might get a little pullback first before we go higher. As you can see, we have another divergence where prices are trying to move up on limited momentum. So expect a little pullback beginning of the week, but then we should have some higher moves before the end of the week. And on Infosys, a little bit of trouble here on Infosys. This was, I think, a trade idea that I was looking for. You can see we never actually got to the entry point. So I was looking to buy on the pullback. It pulled back, just not quite to the entry. Anyway, we hit our target, but you notice we've lost almost all momentum. So with that lack of momentum, I can't see us continuing to move to the upside very well. So if the Nifty is going to move up, it's going to do without Infosys. Expect Infosys to possibly retreat a bit. There is a demand zone here, 1550 area, that I would look to buy as long as the overall trend doesn't shift. So this is on a 60-minute time frame. Look for that pullback again. If I go Infosys, let's see, whoops, go to stocks. There it is, NSE. And looking at the 4-hour, I just want to take a look at the trend there. You can see again, we've got that negative divergence where prices are making highs, but the indicator is falling. So going to that 60-minute time frame, refresh my chart. And actually, we can clean this up. Let's do that. And you can see we are pulling back. We lost a lot of momentum. So not really a big surprise we're pulling back. But what I would look for is a pullback, perhaps, to one of these demand zones. Let's see, rally, base. Actually, that's all. Right there. Leave. Yep. That's your zone right there, about 1559.30, 1548. Now, as far as where we'll go, let's see, go to the 240. And we had impulse up, correction down, and it didn't really help us out. I mean, we kind of stalled a little bit in this area. So let's see if we get another impulse up, correction down. If we do correct all the way down to this area, there's not really any overlap here. So we should be trying to move up to about 1644, 1650. That would be the first target. Target 2 is right there, 1717. So that's what I would say is the trade opportunity right here. Get rid of all this. And there we go. So looking to buy about 1560 with the target 1650 area and then 1716 for the second target. And as for the stop, you want to put it just below 1548. So maybe 1547 or 1546 would be good. So we'll keep an eye on that for Infosys. HDFC on the daily time frame is moving up. We're stalling at a Fibonacci extension, but that's all we're doing is just stalling. It looks very strong, lots of momentum. We should continue to climb up to the 1524, maybe even up to the 1593 area. So there's no overhead supply really to hold us down until we get to that 1593 area. So I expect prices to be bullish on HDFC Bank. In ICICI Bank, same thing. We have a lot of bullish pressure. We had earnings come out, pulled back just a little bit, but overall, still extremely bullish. So we're just getting pauses, as you can see, at the Fib extensions, and we're on our way up to 910 right now. That's going to be our next target. Moving on to the Bank Nifty, this has definitely changed trend direction. You can see we had the positive divergence. Instead of making a low where the RSI is above 40, though, we broke above the prior highs and went above 60. So extremely bullish. And we saw ICICI Bank, HDFC Bank, very bullish, carrying that market higher. And it looks like it wants to continue on the weekly chart. On the daily, same thing. Look how strong this is. nothing holding us down. We can move up towards 40,900. Basically breaking all these prior highs, going back to 2021. So looking for that to continue up. This is the Bank Nifty on the 4-hour. Should say Bank Nifty, not just Nifty. But we do have a little bit of a stumble we might have here as we're coming into a previously tested zone, 39,351. But notice all that momentum is carrying, and we should be able to move higher. I think that we're going to continue up to 40,800 without much stalling. So look for that sector, the banks, to continue to lift higher and trade it as such. So we're going to move on from India to the crypto world and go digital now for the week of August 14th. And jumping into the map of the markets here for crypto, you can see lots of green for the last week. This is last week's performance. Bitcoin up 5, triple nickel basically. Ethereum up huge, 14 and over 1/4%. AMP is up. I mean, a lot of things were moving very, very fast to the upside in the past week. So looking at Bitcoin on the weekly chart, well, we're just barely lifting off almost halfway to the first supply zone from that weekly demand, 19,947. The problem is we had so much bearish momentum that we're not likely to make it above, oh heck, we might not even make it to 29,500. Okay, we just don't really have a lot of bullish momentum at all. I think we're going to maybe stall out that overlap right there. So that's going to be about, I don't know, 25.5 or 26,000. Anyway, looking at the daily chart, you can see there's no way we're getting to 30,000. We've got a lack of momentum. Yes, we did the divergence. We pulled back. We're trying to move higher. We do have a little bit of momentum, but it's really not sustainable. And it looks as though we're going to try to make another run down. So, yeah, we're just limping higher, but it's not going to last much longer. Looking at the 4-hour on Bitcoin, this is what I was talking about, the weakness you can see. We try to make new highs on the price area, but the indication is that we don't have the momentum and we should fall down. Now, we might get a little bounce at 23,978. Let's take a look. I'm going to buy Bitcoin here. Didn't quite make it to the demand zone. Look at that. I'm looking at the live chart here on Bitcoin, and we're already bouncing a little bit. Notice we couldn't get below 40 on the 4-hour. Question will be, as we come up to this prior high right here, which is 25,045, will we be higher on the indicator? So if we get another divergence where prices are moving up and making a new high, but the indicator is not, that's when you expect everything to fall. But if the indicator is making a new high with prices, we could climb a bit higher. Be interesting to see what happens with that. As far as targets go, I don't think I had one, did I? Not really. Again, we were waiting. I was waiting for that pullback. It did pull back, not as much as I thought it would. And let's see. What do we have overhead here? Wow. It's interesting. There's nothing really to hold us down until this target. 27,405 would be the next target. So let's see if there's something actionable here for one on Bitcoin. Well, we don't really have an entry except for the 23,978. But again, if we keep climbing, if we can break out with more momentum than we had before, let's see what the RSI was reading here. That's not showing on my chart for some reason, but it's right around 64.21. So if we're above that 64.21, as we break out, then we should continue to push higher to 27,405. So that could be a nice trade opportunity. We go long here on the breakout, place the stop loss basically 1 ATR below. So what do we got? Basically buying, the high here is 25,0457. That's correct. Okay. So minus 360.4, 24,685 would be the stop. Yeah, hang on. Let's go to coordinates. There we are. I said it was 24,685. .3. Not that I really need that, but that's fine. There we go. So basically buying the breakout 25045, as long as we're above on the RSI compared to where we were before, possibly buy the breakout or wait for the retest as well if you want to be a little bit safer. Stop loss at 24685.3. Target just below 27405. You never want to get out at the zone. You want to get out ahead of it. So looking at, let's see, we'll go right about there. 26,844, then target 2, again, just a little bit below. We're now rushing for the exit at the same time as everybody else, so it'd be 28,956. So that might be a trade opportunity on Bitcoin to keep an eye out for. So let me do this real quick. I'll take a picture of that as well. And that way we can keep an eye on it for next week and monitor the situation. There we go. Animations, just give me a second, and there it is. Perfect. So I go back. Oops, wrong page. There it is. And there's a trade idea. All right, so Ethereum is doing a bit of a retest or retracement. You see the weekly chart, we had a big impulse down. Didn't quite make it to the demand zone, but we've been retracing. We retraced about 38%. Still overall bearish on the weekly chart. Going into the daily, now we got a lot of momentum. It looks like it should be able to continue to go higher to 2201. And we got lots of momentum. Looks like it should push up a little bit more than where we are. Looking at the 4-hour, a little bit of divergence, and that gave us the pullback. What I was actually thinking about was a possible buy opportunity at 1904.20 to target 2293. I didn't have anything else above, did I? Well, 2201, 2513. So yeah, that might be a little bit in the way, but honestly, you could target even 2201 just right above. So I'm not sure where you are right now. Let's take a look at the Ethereum. Whoops. On the 4-hour time frame. And unfortunately, we already missed it. Look at that. Did exactly what I said it was probably going to do. Pulled back right off that demand zone, and there it is, off to the races. So, don't chase, okay? So if you missed it, it is what it is, okay? You missed it. No big deal. But yeah, it should be continuing up towards that entry or the target. There may be some other opportunities along the way. If you go down a smaller time frame, like a 60-minute, if you end up forming some sort of a demand zone along the way, you just got to wait for a pullback, basically. So this is starting to form a bit of demand right now where you have drop, base, and rally. And we might stall out because we're near a little bit of selling pressure right there. Notice the drop, base, drop. So if we do pull back, which it kind of looks like we might do right now, there may be another buying opportunity, 1940, 1919. And we should be able to break this on the next test because the higher time frame is bullish. But there we are, pulling back, buying at this 1940 area with a stop again below, and target that same area about 2215 eventually. So keep an eye out there for Ethereum on that pullback. Let's see, do I have anything else? Actually, what I can do, because I don't have anything else, is I can go back to the crypto heat map, and this is the performance for the past week. So again, we can take a look, or even at the current day, but I can also just take a look to see what's been really moving Solana. So we can take a look at Solana and see if there's any opportunities there as well. It's still up about 2% today. So if I go to the weekly chart, start off on the big picture, and we'll start off with a clean chart as well. There we go. And not really seeing much here. We are bouncing off this area of the origin of the previous move here on the weekly chart, basically. That drop, base, rally. So we bounced off that, but we were very, very bearish. So this is not going to be a very strong bounce. We're not likely to make new highs at all. Going down to the daily time frame. And yeah, you can see we're trying to make a new high right now. Just barely creeping into bullish territory, but not seeing a whole lot of momentum. So we're stalling out right now. Do we break the supply? Not quite. but we're getting ready to. I just don't see a good trade opportunity. It looks like we're just kind of lifting a little bit higher, but not very strong. So I think that's where I'm going to call it for us right now. So I want to thank you for being here this week. If you got any requests, again, let me know. Hopefully you like the video. Please hit like and subscribe so that way you can be privy to the new videos coming out every week, and give us some input. Let us know what you like, what you don't like. And we're doing what we can to improve the product here and make the best informative analysis, basically, for those financial markets that we can do. So I want to thank you all for being here. Until next time, trade safe, trade well, everyone. Take care.